the twisted game of day trading, and how to win at it. Have you ever wondered why 90% of retail traders lose almost all their money within just 90 days? Why so many people chase the dream of financial freedom through day trading only to end up broke, frustrated, and stuck in the same place they started? What if I told you that the entire system might be rigged against you from the very beginning? In this video, we're diving deep into the twisted game of day trading, a game designed to feed off your ignorance, impatience, and greed, and more importantly, how you can actually flip the script and win. But are you really ready to unplug from the matrix and face the uncomfortable truths the industry doesn't want you to know? Let 1,000 retail Forex traders be represented by this circle. Imagine this now. This is how 100,000 traders appear. Zoom out once more. The expected number of retail Forex traders worldwide currently is 15 million traders. This is where things become even more intriguing. In the last 3 years alone, 40% of them have entered the markets. The majority brought with them a dream, the notion that they could escape the rat race with a laptop, an internet connection, and an account worth about $5,000. However, this story takes a cruel turn. Within 90 days, about 90% of these traders lose 90% of their capital. Retail Forex traders have lost at least $24 billion in just 3 years, according to the calculations. And you know what? That money didn't simply disappear. CFD brokers and other players that stand on the opposing side of your trades in this zero-sum game snatched it up. And it only applies to Forex. You're looking at a $100+ billion industry driven primarily by retail losses when you include prop firms, retail stock and options brokers, crypto exchanges, signal suppliers, trading bots, courses, and all the shady schemes that surround them. That is day trading's twisted game, and you're in it whether you like it or not. Imagine yourself sitting in your childhood bedroom as a novice retail trader just out of a YouTube rabbit hole, planning to use Forex chart flipping to escape the matrix. You purchased that $299 technical analysis course from a 20-something Instagram guru who trades on demo accounts and rents Lambos. The harsh reality is that you are bait, not just a fish in the wrong water. Trading is not the same as working your way up the corporate ladder or managing a small business. The house doesn't only have the odds, they designed the entire game to bleed you dry. It's similar to walking into a casino. You are not up against others when you enter the financial markets. You are competing against organizations that have billions of dollars in funding, teams of PhDs in quantitative finance, macroeconomics and mathematics, AI-powered algorithms, and exclusive access to data that you will never see. You are at a severe disadvantage right from the start. There is more to the financial markets than just buying and selling. They are geopolitical battlegrounds where trillions of dollars are exchanged daily, making them the most competitive and manipulative settings on Earth. So ask yourself, do you really think that a 12-minute YouTube video that revealed a $500 a day technique can help you outsmart that? The majority of people who start trading emotionally compromised do so out of desperation, greed, or a desire to flee their current situation. Regretfully, the industry is ideally positioned to profit on those precise feelings. Though things are important, it's not only about a bad attitude or a lack of discipline. A lack of real information is another issue. You're not simply unprepared if you've never heard of yield curves, matching engines, auction theory, or liquidity traps. You're naked. You cannot protect yourself if you don't know anything. Additionally, you will be harvested in the financial markets if you are unable to protect yourself. Why do scammers fool so many people? Why do they continue to blow up accounts every year? Why would someone lose all of their life money while staring at a slot machine? The human brain is hardwired to shun pain and pursue pleasure. Everything stems from this hedonistic premise, which is our desire to become wealthy quickly with little risk or work. You need a repeatable data-backed strategy with a statistical edge to beat that. However, what do the majority of novices do instead? On charts, they draw lines. They make use of indicators that they hardly comprehend. Every week, they switch up their tactics, and nearly all of them wind up losing on the same side of the same transactions. Forex is where most retail traders begin. Why? Because it's promoted as being simple, seductive, and affordable. You can use about $10 to start an account. However, if it's so simple, why do experts primarily use order flow, macroeconomic, and volatility data when trading stocks, futures, and options? Both because specialists steer clear of the easy things, which is typically a trap, and because those instruments offer better edges. There are 4 data points on a candlestick. There may be hundreds in the order flow. The majority of traders are unaware that these tools even exist, much less know how to use them. That is the issue. Another typical snare? Scalping, please. Scalpers are adored by the industry. Why? Because the more you trade, the higher the commissions you pay. Overtrading, inadequate risk management, and gambling tendencies are encouraged by scalping. Yes, there are professional scalpers. However, scalping is like doing brain surgery during an earthquake for a novice. The edge is challenging to maintain. The margin of error is narrow and the stress is great. You would be better off learning to trade longer time frames when risk is easier to control, noise is lower, and edge decay is lower. This is the real way to win at this game, and no, it's not a secret method, hack, or trick. From a real guru, no. From actual, seasoned traders who have proven track records. Study auction theory, macro, order flow, volatility, and risk management. Learn the genuine thing. Try your plan. Test it backwards. Test it forward. Keep track of it. Maintain a journal. Maintain statistics. Recognize your advantage. If you allow it, your brain will work against you. Keep a journal of your emotions. Recognize the concept of cognitive dissonance. Develop self-control like a muscle. Think of your brain like a puppy and learn to govern and train it. The conflict between your emotions and your system is known as cognitive dissonance, and it arises with every deal. You should shut down early. You'll want to trade retaliation. You should try chasing maneuvers. However, what they do in those particular moments is what separates a losing trader from a winning one. That is the conflict, the market, number, your own thoughts. The business of trading is brutal. The odds are not in your favor. The industry is set up to take advantage of your naivete and impatience. Long, arduous, and full of psychological warfare is the road to success. The good news is that you can succeed. You can succeed if you educate yourself, develop a true advantage, and master your thoughts. This won't happen immediately or in a matter of weeks, but through years of dedicated execution. Not everybody will. However, someone will. Why don't you? If you found this video eye-opening and want more real, no-fluff insights to help you win in the world of trading, hit that subscribe button and join our community. Trust me, you don't want to miss what's coming next.